Good evening, everyone. Welcome to another live sharing class. It's my honor to be able to host everyone here. As a gentle reminder to everyone, please remember to apply the knowledge you have learned in my class and put it into practice. Continuous of learning and practice will definitely improve your trading skills, which will eventually lead to more profitable trades. And our goal here is all about financial freedom. So let's work hard together to achieve it. We are all here to learn something, okay, new or old, and advance our portfolio. And for our new topic for today is related to support and resistance. I will share more about it in a later part of the class. I know that I've shared some similar contents about support and resistance before, but the contents I choose today to share with everyone is something that I believe is useful and important for most of our members. This technique will be able to help everyone to have a clear understanding on how to read the chart better. Okay, besides sharing trading techniques, I also will scan for more profitable and high quality stocks, share market analysis, and guide everyone in all aspects of trading. So I hope that everyone can be more skillful and profitable. Thank you everyone for your support. Okay friends, today's content that we'll be covering will be also about 4 topics. Okay, we'll go over these 4 topics for today and also update everyone on the Asia Pacific region competition standing. So let's take a look at the overall market situation. In the past week, there were actually only 3 trading days, okay, because of the holiday, which was nearly half of the usual trading time that we have. But however, in these 3 days, sellers in the market once again demonstrated their basic strategy of selling on rallies. This is one of the situations that ordinary investors least want to see in the market. And of course, regardless of your thoughts, the market will operate according to its own rhythm. Well, let's continue to take a look at the actual market trend. So we start off with Nifty 50 for the weekly chart. In the past week, the Indian stock market has experienced another decline, occurring over just 3 trading days. The previous upward momentum has changed, and now let's take a look at the situation of the Nifty. From the weekly candlestick chart, we can see that there have been 2 consecutive weeks of decline, which is the past week and last week. And the market has already broken through 2 upward trend lines, indicating that the market has entered a period of adjustment. And of course, this kind of adjustment is not entirely a bad thing. As we all know, the market does not only rise and never fall, nor does it only fall and never rise. It always operates in cycle before rising or falling. The current market adjustment is only to facilitate a better upward movement in the future. And the current adjustment is more of a correction and accumulation of upward momentum since the market began to rise at the end of October 2023. So from a technical perspective, there have been consecutive weeks of decline and the trend line has been broken. So it will be difficult to recover into a trend-based upward market in the short term. Next, there may be a rebound in the market, but we cannot say that the trend will reverse upward fundamentally until the direction of the market undergoes a fundamental change. The extreme target for this adjustment is between 20,300 to 20,500. So we have emphasized that in the upcoming oscillating adjustment market, it will bring a certain level of difficulty and risk to ordinary investors. Despite the overall market being in an oscillating adjustment phase, for all our members and friends using the asset management account for trading, whether it's trading in stocks of the UC limits or applying for IPO or even profit opportunities like block trades in future, all these methods and paths to achieve stable profits. Therefore, everyone need not to be worried about it. Okay, so let's take a look at the Sensex for the weekly chart. As for Sensex, okay, the chart pattern of the Sensex index is basically similar to Nifty index, and we can interpret it from a different perspective. And of course, the analysis of the Sensex result also applies to the Nifty index. Currently, from the chart of the Sensex index, we can see a continuous decline this week. The current price is already between the weekly MA5 and MA10. And the MA5 is showing signs of turning downwards. Although it's not very obvious at the moment, once the MA starts to turn downwards, it takes some time to regain an upward trend. And therefore, as mentioned earlier, for the index to resume an upward trend, it will take time to rebuild the momentum. So, from the perspective of a technical perspective, the index has just adjusted for 2 weeks, which is not sufficient considering the nearly 3 months of a previous upward movement. We expect further oscillation and adjustment to continue, and the ultimate downward adjustment target for Sensex is 67,600 to 68,300 range. Regardless of whether it will adjust to this level, as a trader, we must prepare for this mentally in advance. So, however, it should be clear that even in just such an adjustment occurs, it will only have an impact on ordinary investors in the midst of the adjustment. Our esteemed members will not be affected by this adjustment. In fact, our profits will increase sufficiently during this time. I believe that our trading members have already keenly felt about this. Okay, let's take a look at the next topic that we're going to be touching on will be microanalysts. So as for microanalysts, okay, the reason why we focus on these aspects is that they not only allow us to have a broader perspective to examine the market, especially when the market has entered a period of volatile adjustment. So on one hand, we need to avoid the challenges that market adjustment bring to trading, and on the other hand, we also need to keep an eye on the timing of the market recovery and upward trend. Okay, this means that we cannot solely focus on technical aspects of market trends, but also need to track and interpret microeconomical factors. This will help us to develop trading plans and strategies that are more in line with the market condition and have a winning edge. Okay, let's take a look at the first news. Okay, according to a private survey, due to strong demand, business activities in India expanded at the fastest pace in 4 months in January. The survey also indicates that input costs rose to the fastest pace since August. The survey results suggest that India is likely to continue to hold the title of the fastest growing major economy, at least in the short term, at least for this short term or period. The HSBC India Composite Purchasing Managers Index, which is PMI, compiled by the Standard & Poor's Global rose from a final value of 58.5 in December to 61, the highest since September. The improvement in demand has boosted businesses' expectations for the next 12 months, particularly in the manufacturing sector, as future output surged to its highest level in 9 years. Businesses continue to hire staff for the 20th consecutive months. With job opportunities increasing in the service sector, while the speed of the overall output price increase in January was relatively slow. The pace input cost growth was largest since August 2023, indicating that the price pressure may still be relatively high. Retail inflation in India reached a 4-month high in December, and the Reuters survey suggests that the Reserve Bank of India will keep interest rate unchanged until at least July. It is evident that India's economy is still thriving, and the Reserve Bank of India is not likely to prioritize interest rate cuts in the short term. Although hopes for the rate cut to further stimulate the stock market may temporarily fall through, however, from my personal point of view, India's stock market bull run of the last 30 years is not determined by one or a few changes in the monetary policy, but by the stability of India politics and various reform measures serving the economy, which has indeed made significant progress. Whether it is economical development or trading and investing in stocks as an investor, on the one hand, we should focus on the long term, and on the other side, we should be grounded in the present. The reality is that although the stock market may undergo adjustment, we have achieved rapid and stable growth in our recent trading profits. Alright? Okay, let's take a look at the next news that I'm going to share. Okay, Nomura Securities predicts on Friday that the Federal Reserve will cut interest rate by 100 basis points in 2024 and slow the pace of the balance sheet reduction in June, followed by ending quantitative tightening policy in December. Generally, a 100 basis point interest rate cut is a significant move, especially when it's expected to occur within 6 months starting in June. Usually, the primary purpose of the rate cuts is to stimulate the economy, promote credit activity, boost investment and settlements. For the stock market, there is usually a very positive response to interest rate cuts. Additionally, rate cuts help lower the financial costs for business, boost investors' confidence, and drive stock market gains. And I wonder if everyone have noticed a phenomenon. Earlier we discussed about the domestic market, and it was expected that the Reserve Bank of India would probably not cut rate before July. However, some institutional are currently expecting the rate to be cut in June. If both the US and India were to cut the rate in June and July, it would definitely have a significant stimulating effect on the stock market. And of course, as we mentioned earlier, the ultimate determining force for the long-term rise in the stock market is the development of the real economy. So currently in India is the fastest growing economy in the world. So I am confident in the long-term development of India's stock market. However, for the short-term adjustment, it would worth being cautious for investors who are still engaged in ordinary stock trading. Okay, so this is about the Fed cutting the interest rate. Okay, so for those who are still holding on to some ordinary stocks, please be cautious about it. Okay, that's all for the news. Let's move to the next slide, which is about the Asia Pacific headquarters results and IPOs. Okay, it's time for a moment that everyone is particularly concerned about. Okay, that is the disclosure of the result of our asset management skill competition for last week. Okay, first of all, okay, I would like to say thank you to all members for your support. At present, we are in an intense stage of the asset management skill competition. Although we only had 3 days of trading in Indian market last week, but thanks to everyone's strong support and the high profit we gained from the IPO listing subscription, our asset management skill in the India region has also been greatly increased this week. Okay, so this is the current result up to date. Okay, as of last Friday, 26 January, the result of the asset management skill competition are as follow. For India, is 1.466 billion pound, and for Japan, is 1.328 billion pound, and for Hong Kong, which is 1.618 billion pound. Okay, so this week we only have 3 trading days for the Indian market. The growth rate of the asset management skill in our India region has not slowed down at all. The gap with Hong Kong is further narrowing, and I personally very satisfied with this result that we have achieved. At the same time, I am also very confident in surpassing Hong Kong and taking over the Asia Pacific region in the future. Because in the future, major projects that will further accelerate the growth of our asset management skills in India region are about to be announced, okay, to be launched also. And I believe that our asset management in the India region will increase more rapidly by then. So on the other hand, the asset management skill in our India region will continue to experience explosive growth next week. It is all because of Additive Learning Technology Limited IPO, which was subscribed on the 19th, will be listed next week and bring us huge profit margin. At the same time, it will also enable our members' assets to grow rapidly. After all, this time we have received a relatively large numbers of shares, and the number of allocation for everyone will also be relatively larger, and the profit after listing will be even more. Okay, so in the past week, the stock index also experienced a significant adjustment. From a technical trend perspective, this adjustment has not ended, correct, as I mentioned just now, and it will not end in this short period of time. However, we can use our asset management accounts to trade, whether it is trading UC limit stocks, applying for high quality IPOs, or even upcoming major projects, as I mentioned, which is block trading. All of this can help everyone to achieve continuous and stable profits. Therefore, this market adjustment will not affect our profitability, but also an important opportunity for our asset growth to increase and overtake. Okay, let's move on to the IPO. So for Additive Learning Technology Limited, IPO subscription was 273.12 times oversubscribed. As of January 24, 2024, the third day, the retail category subscription was 301.71 times. QIB category subscription was 116.27 times. And the NII category subscription was 414.44 times oversubscribed. Okay, here's a piece of data. It's worth noting that by the end of the second day of the subscription, the IPO was only subscribed 107 times, which means that the subscription increased by 166 times in just one day, on the third day. This indicates that the tremendous interest in this IPO within just one day, surpassing the total subscription of the previous 2 days. It's easy to see that the level of excitement for this IPO, okay, is very big. And this clearly demonstrates that the market recognition of the IPO and future prospect post-listing, which is also very huge. Moreover, considering that we already signed a price support agreement with the underwriters, everyone can be confident about the profit potential after the stock is listed. Okay? So, in addition, it needs to be mentioned that members who have not yet complete, okay, or partial payment is not complete for the allotment, should hurry up and complete the payment. Okay, and to be honest with everyone, such profit opportunities do not come every time. I had to negotiate very hard with the underwriters for the allotment for this IPO. Okay, I have been speaking to them for months about this until they agree that they will give us the allotment. Okay, so the key is that the profitability of this IPO after listing is guaranteed, as can be seen from the chart. The current GMP premium has reached 125%. My personal judgment is that it will continue to rise, and this is just the nature force of the market, indicating that the market is extremely optimistic as well. Secondly, as everyone already know, as I mentioned, we have signed the relevant stock price support agreement, and the underwriters have allocated a lot of shares to us. Since those have already win the allotted shares through us, so I urge you guys to make the payment as soon as possible, okay? Because it can be quite a serious matter if there is a violation between institutions and companies, okay? At the same time, I believe that those who have been allotted shares will be able to deposit their money and during this required amount of time, okay? So I urge everyone who have not made the full payment, please look for my assistant to deposit the funds or the remaining differences of the funds, okay, for the allotted shares as soon as possible. And thank you very much, and hope that everyone can deposit as soon as possible. Okay, let's move on to the next slides, which will learn more detail of the support and resistance that I mentioned that about the topic today. Okay, as today's topic is like regards to support and resistance, okay, but the main point is how to determine the support and resistance. We have previously touched on some aspects of support and resistance, but it was not comprehensive enough. Besides, many people are still very interested in this topic. Okay, they would like to ask a lot of questions on this, so I take this chance to share more with everyone. So today, I will share more about this support and resistance on how to determine. Okay, as I mentioned before, when it comes to support and resistance, this is one of the most common issue in the market. Using technical analysis, we can encounter these issues every day. Therefore, this aspect of understanding in both fundamentals and also most difficult to grasp the master completely, because it's not that easy. Okay, we might not be able to cover everything about all the contents in today, but it is okay. I will try to break it up, okay, and let everyone to slowly learn gradually. Okay, in additional, it's essential not only to understand the technical aspects, but also to pay attention to the flexible application in actual trading. Okay, let's move on. Okay, what are some ways to determine support and resistance? We already know what support and resistance are, okay, because I shared with everyone before. And understand the basic principle of buying at support and selling at resistance. And there is another key question, and that is, how should we accurately judge support and resistance? We can only apply it in real trading if we accurately judge where support and resistance are. Is that true for everyone? So, I summarized some methods for judging. Okay, how do we judge the support and resistance for you all? Although it may not be comprehensive, but the main methods or classic methods used in the market must be here. Okay? So, for point number 1, the position of a previous high and previous low, okay, of a certain uptrend or downtrend. Although this sentence seems not easy to understand, it's actually very simple. Okay, just like a horizontal trend line. First, you have to have two previous high or two previous low, okay, low points. Then you can have a second horizontal point. Okay, first you must have one, then you have second one. We all know that 2 points make one straight line. So, with a second horizontal point, a horizontal trend line can be determined. Okay? So, this is one link after another. Nothing appears out of nowhere. If no trend, there is no line. Okay? For point number 2, important market moving average. Okay, what are important market moving average? Because not all averages can be support or resistance. Yes, we can use averages to be support and resistance. Okay, when many investors in the market have certain communities and consider a certain average to be important, and more people use it as a reference, then this average is an important moving average. Okay, for point number 3, trend line. Regarding this point, when talking about trend earlier, some content related to this was also shared with everyone. Okay, if you guys remember, at this point, everyone may realize a problem. There is many theoretical technical points are common, and they do not exist independently. From this point of view, it requires everyone to learn and understand with an open mind and inclusive thinking, and not just one-sided. Okay? Okay, for point number 4, is the point of golden section. For the golden section, it usually refers to another name, which is Bonfonia C, retracement level, which has been mentioned to everyone before or been used before. Okay? And of course, there are also judgments such as integral barriers, dense trading area, and so on and so forth, which are not detailed over here. Okay, let's take a look at the next slide. Okay, the first method and the relationship between them prior high and lows and the support and resistance levels. Okay, previous high and previous low. So, firstly, each high or low point in a trend has a potential to become a support or resistance. Why is that so? It's a question of market psychology. When the price rises again to a previous high, many traders naturally feel a fear in them of whether the price will continue to rise. When the price reaches a previous high, traders often think about taking profits. Okay, once they reach a previous high, they think of selling away the stock. And some funds may have bought at a previous high, those who buy at the previous high, and have been floating loss position. Okay, floating loss position. So when the price return to the previous high, this fund naturally becomes, they will think about to sell to break even. Okay, which will lead to an increase in selling pressure. Therefore, we can say that once the selling volume increase, it becomes a resistance. The same logic applies to support. Okay. Secondly, when the high point is broken through, means breakthrough, okay, the level will become a support. When the price retracts and when a low point is broken downwards, that level will become a resistance when the price rebounds. Okay, there is a situation of support and resistance conversion. Okay, resistance conversion. This is something that we have discussed before with everyone also. Okay, the conversion of a support and resistance, which was explained previously, okay, which I will not touch on today anymore. Okay, for third point, not all previous low will become support, and not all previous highs will become resistance. Okay, why will I say that? Okay, let's use some graph, okay, to show you guys, and you guys will have a better understanding. Okay, at this graph, you can take a look at this chart. Okay, this chart represents a standard formation where the previous low become a support. So pay attention to the point number one. Okay, a low is formed. Okay, a low. Point number one, a low is formed. Of course, the reason this low become a previous low is in comparison to the subsequent low. Without the subsequent low, it would never be possible for this point to be the previous low. Okay? Okay, after a price rebounds, the price fall to point number two. Okay, which is point number two. Rebound, point number two. Okay, point number one truly becomes the previous low. Okay, this is a previous low. When the price become near the low again, support is formed. Okay, you should remember this is a horizontal support. Okay, subsequently the price start to rise sharply, which can be seen on the chart. Okay, from here it start to rise up. This also belongs to a psychological barrier in the market. When the price falls near the previous low, the majority of investors in the market believe that this position is a buy opportunity. Correct? Buy a support. Correct? This is support. Naturally, this forms a certain amount of buying power. This buying power will form a self-reinforcement cycle. And only when this buying power is reinforced can the price continue to rise. Additionally, it's important to note that not every previous low will form a support. Okay? Okay, let's take a look at the next chart. Okay. For this chart, okay, where the previous high become a resistance. Okay, so there's 3 points to take note. Okay. The first high point is not specifically labeled, but it is a previous highs relative to the later high point, which is here. Okay. Okay, at the location which I put as marking of 1, it's quite obvious that the price rebound near the previous high. Many traders naturally feel a sense of fear when the price approaches the previous high, wondering whether it will continue to rise. When the price rises to vicinity of the previous high, many traders tend to think about cashing in profit. Additionally, some funds may have been brought near the previous high and have been a floating loss position. When the price reaches the previous high again, these funds first consider selling to break even. As I mentioned before, they would think to sell because to break even, okay, leading to an increase in selling pressure. So the point that I marked 2, okay, the location I marked 2, the situation is also similar. It's important to understand that the market often has a memory. Okay? Even though a significant amount of time has passed since the first high point, when the price rebound to near the previous high, the market still experiences pressure. It's worth noting that the second position is not necessarily on the exact same level as the first position, as you can see. Okay, it's just a bit of difference, but this does not change the reality of the previous high becoming a resistance. During practice, okay, it's important to be flexible and not to get caught up on whether the rebound position aligns exactly with the same as a previous high. It's normal for prices to have a slightly difference. Okay, it might have some difference, cannot be exactly the same. As I mentioned before, there is no two trends exactly the same. Okay, let's take a look at the next slide. Okay, let's take a look at the graphic of the support turning into a resistance. Okay, in the graph, the area marked as 1 is obviously the previous low, okay, which is here. After the previous low is formed, when the price falls again to the position, the support is very obvious, which is marked as point number 2 and point number 3. The price formed a clear rebound and the upward movement are quite good, indicating that the support is still effective. Okay, so 1, 2, and 3 support. However, after 2 rounds of rebound and rise, the previous low position is finally broken downwards. During the subsequent rebound process, it formed a clear suppression on the price at the position marked as 4 and 5, showing very obvious resistance. This is the manifest of the previous support turning into a later resistance. Why can support turn into resistance? You guys might ask. Okay, as I mentioned, the market has memories, and investors also have memories, which is even more. After 2 previous support, which is at point number 2 and point number 3, When the price falls back to that position again, investors still buys. But unfortunately, the price breaks through the support during the fall, leading to losses for stocks held by the investors. Because there is no continuous downward market, when the price rebound to the previous support level, which is marked at 4, these investors are eager to sell away the stocks they are holding, which naturally creates selling pressure. Right? Once the selling pressure increases, it forms resistance, which is a specific manifestation of the market psychology in technical graph. Okay, let's move on the next slide. This is another case of turning resistance into support. Okay, first of all, it should be noted that in this figure, in this chart, all the highlighted high points or low points are not completely horizontal. It's not in a straight line. If you notice, this is to tell everyone that many times high points or low points just need to be close. No need to be exactly the same. Let me briefly explain this graph, because it's essentially just the reversal of the support turned into resistance that we discussed earlier. This is just the opposite of it. For position mark 2 and 3 in the graph, it obviously the price fell due to the pressure of the previous high. So the position mark 1, marked as 1, signified that the best explanation of the previous high, meaning that it was the previous high. At position number 4, the price breaks upwards. The price breaks upwards after a round of rise and the price retracement, and at this point, this time, the previous high resistance, which was marked as 1, will become the support, supporting the price to rebound or rise, which is the point number 5 and 6. This will become a support line. From a resistance, it changed to a support, for the support for point number 5 and point number 6. This is a clear case of resistance turning into a support. From a resistance of 1, 2, 3, and 4, 4 is a breakthrough, and 5 and 6 it become a support. Let's move on. Let's continue to take another look at another type of support and resistance, which I did mention just now, the important moving average. About moving averages, I also have shared some related contents before, about MA. I believe everyone still remembers about it. However, there is really a lot of content about the application or technical aspects of MA, which is moving averages. We have the opportunity to share more details content with everyone in future. Don't worry about that. Today we only share about one part of it, using the moving averages as support or resistance. This part was not being shared to anyone of you guys before, so today I will share a bit more on this. Actually, this part is not really that complicated. So when studying the use of using moving averages as support and resistance, when the trend is outward, sometimes important moving averages are considered as support lines. Conversely, when the trend is downwards, some important moving averages become the resistance lines. We know that in a technical chart, there are countless moving averages, which is MA, can be called. Okay, such as the common ones will be MA5, MA10, MA30, MA60, MA120, and so on and so forth. So, the thing is, which moving average is considered as important? Correct? So, there is so many. So, which one is important? It can be clearly stated that the different users, will use different parameters. This I shared before also for different moving averages, which is not fixed. Okay, and not every moving average is omnipotent. Okay, it can be chosen based on actual market conditions and individuals' experience or needs. And of course, the so-called important moving average is determined by the number of market participants who use it. If a certain moving average is used by a large number of market participants and is widely recognized in the market, then that will be an important moving average. Okay, I'll give you an example, which is, for example, MA60. The MA60 moving average is chosen as a reference by most traders in the market, which was formed a certain degree of market communities. When the majority of the market participants, okay, recognize this moving average, it naturally becomes support and the resistance. This often leads to the fact that when the price approach the MA60, it will produce a certain support and resistance effect. So, do other parameters moving average have no effect? The answer is no. Ultimately, which moving average to use still depends on individual. Okay? It all depends on individual user. Okay, so you can see, okay, on this graph, okay, there is only one moving average line on this chart. Okay, you can see the yellow line, okay, which is the MA60. Okay, we can see that the MA60 line has repeatedly acted as a support for the price. And many times, the price has retraced to the vicinity of this moving average before starting to recover and rise again. Okay, of course, there have also been false breakout below this moving average line. Okay, false breakout. You see, followed by a return to the outward trend. This is the support role of the moving average line. Okay, you can see all the marked circle is support. Okay, so the question is the MA60 the most important moving average line in the market? The answer is obviously not. The MA60 can be considered as a widely used moving average, but it's not the only important one. It is presented here just for reference and learning, and as the only moving average to be used in the future. Okay, it's not the only moving average. Okay, for example, as I often mention, the MA5 can also consider as a moving average for assessing whether the short-term market trend is smooth. Okay, in the longer term, for example, the MA120 is also an important moving average. The so-called important moving average depends on the time frame of the investment or trading. Whether it's a short-term trading, swing trading, or long-term investing, the moving averages used are different. When using moving averages, everyone should pay attention to the selection. Okay, how are you going to select? and which one is the suitable for individual. It's important to choose what is most suitable for oneself, as what suit oneself is the best. Okay, if it suit you this way, then that will be good for you. Okay, let's take a look. The next one is resistance. So, similar, we are using the convergence of explanation of the moving average, okay, which is also the MA60. Okay, as for how this moving average creates resistance on the prices, the principle is actually the same as forming for support. Just is the opposite way, okay, opposite directions. Okay, which I won't explain in full details about this anymore. Okay, you can see the places mark circle, it become the resistance. Okay, but there is one thing to note here is that in the process of using it, everyone should pay attention to the issue of the direction reversal of the moving average. This can help us solve some false signal or fake trading signal during trading. Okay, this is important. Okay. So with this help of the method, okay, can't it make our trading or market analysis more clear and a bit more simple? Okay, which can avoid unnecessary troubles. Okay. Okay. Things to note when using moving average. Okay. There are 4 points. Point number 1, saying that the important market moving averages are not fixed value. Usually, moving average like MA30 and MA60 are more commonly used in the market. Everyone can also choose a moving average like they like through observation. Okay, everyone has different preference. Okay, it is important to note, okay, the direction of the moving average. When the direction of the moving average is upward, and most of the time it will serve as a support. So when the direction of the moving average is downwards, and it will most of the time will serve as a resistance. Okay, for point number 3, it is important to note that when the moving average becomes support or resistance, it will not always continue. As you can see just now, it will change. Okay, because the market trend will eventually change. Okay, when the market, okay, for point number 4, when the market starts to fluctuate, the support and resistance effect, okay, of the moving average will become ineffective. Okay, when it fluctuates, it will become ineffective. Okay, so this is my end of my live class sharing for today, and thank you very much for joining my class and giving me your full support. We'll continue our live class on this coming Tuesday, which is 30th January at 8 p.m. Okay, I hope to see everyone here, and thank you once again, and have a great night.